Did you know that more banks will soon be getting into deeper trouble than we've ever seen before?
Why is this overly dramatic, computer-generated voice worried about our banks being in trouble? What on earth is going on with the banking system, and why are so many people talking about potential bank failures? Why is the president of money predicting bank failures? This is a critical time in our history that's full of opportunities for those of us willing to open our eyes, look around, and take action. In this video, we're going to look at the precarious economic situation we're in, why so many banks are struggling, and why I think whole life insurance is one of the absolute best ways to protect ourselves in these uncertain times. Let's get into it. What's up, y'all? This is Ian with Freedom Flow Finance and IULrehab.com. And before we even get into the question of bank failures coming, there's another question that may be even more important. Does it even matter if the banks fail? I mean, think about it. Back in 2008 and 2009, over 560 banks failed, but our system is still up and running. During the Great Depression, 40% of banks closed and never reopened. And throughout the history of the United States, 17,000 banks have failed. Is it even a big deal if banks fail? I think that's a completely valid question. The thing is, right now we find ourselves in a unique economic situation. Let's just look at what's happened over the last year.
Silicon Valley Bank collapsed on March 10th, Signature Bank on March 12th, First Republic May 1st, Heartland Tri-State Bank on July 28th, and now New York Community Bancorp. Stocks are plummeting and things don't look good for them. This new news has also caused other regional bank stocks to fall, causing some concerns for depositors.
And I totally understand why bank depositors are concerned. 3 of the banks that failed in 2023 alone took $36 billion of the $122 billion reserve in the FDIC. The FDIC insures over 4,000 banks, and just 3 of those banks failing took over a quarter of their total reserves. To be completely honest, the FDIC is a joke. It's like wearing a bulletproof vest made out of crocheted yarn, hoping that it's going to stop a bullet. The Federal Reserve is well aware of how flimsy the FDIC is. So in the spring of 2023, when banks started failing, they had to start an emergency program called the Bank Term Funding Program. The Bank Term Funding Program was essentially just another bailout for the banks. They were allowed to borrow money more cheaply so that they could stay afloat and so that our country could avoid another economic disaster.
Let's just go back to March 12th of 2023. We have to go back to that date and ask ourselves what would have happened if the Fed would not have stepped in. What would have happened to the banking system? I think the majority of your viewers that are watching this right now would say, well, George, in that case, yeah, I mean, the system probably would have collapsed. We actually had more banking failures in 2023 than we had in 2008. So I don't know how people can say that wasn't a crisis, right? Or that we're somehow over the crisis. If you look at the total assets, the size of the balance sheets that went bust in 2023, even when you adjust for inflation, that exceeded the level that we saw in 2008.
The government regulators at the Federal Reserve know full well, like they did back in 2008 and 2009, that the FDIC does not provide any meaningful protection. Yet, the narrative that they portray in the media is a little different.
The chairman of the Federal Reserve testified to Congress a while back last year saying that the state of banking was strong. Why would we hear that and then all of a sudden see another 4 banks collapse with others that are said to be unstable or just losing money? And what was told to me was they have to stretch the truth a little bit when they're talking to the media. And as you can imagine, if they actually came out and said that banks were going to collapse, people would panic and take their money out. That's called a bank run, and the banks aren't prepared for that.
The thing is, it's not just the small banks that are suffering right now.
Financial Times says that earnings in top 6 U.S. banks have dropped by about 13% in the last 3 months when compared to the same period last year.
Okay, so banks are clearly having a problem right now. But why is that? The answer? The commercial real estate market. Things were all well and good when the interest rates were down at 0. But in March of 2022, the interest rates started to go up. And when the interest rates go up, it gets more expensive to borrow money. And when it gets more expensive to borrow money, less people borrow money to make big purchases, like commercial real estate. Everybody who's in the real estate business understands that right now the commercial real estate market is not doing good. Because of the interest rates, people aren't borrowing money. They're not buying properties, they're not selling properties, and the entire market is basically stalled out. New York Community Bank has been one of those banks that's been in the news recently because it's been skating on very thin ice. That one bank alone absorbed over $550 million worth of credit losses because of just 2 commercial real estate deals that went under.
As of now, NYCB stock price has witnessed an 80% decline since January.
But it's not just the small banks that are being negatively affected by the disaster that is the commercial real estate market.
Financial Times is now reporting that the largest banks in the United States, including Citi, Bank of America, Wells Fargo, and JP Morgan, are expected to report a sharp rise in bad loans. Combined, these banks now have $24.4 billion in non-performing loans.
And to make matters worse, the Bank Term Funding Program loaned out $164 billion worth of loans to banks across the United States. And at some point in the near future, those loans are going to have to be repaid. And that's just going to add an additional stress onto banks that are already in trouble.
It seems like we're just at the tip of the iceberg. Hundreds of banks are finding themselves in deep water with bad loans piling up.
The face-planting commercial real estate market is dragging the entire banking system down. There's not anything that anyone can do about it, including the Federal Reserve.
Commercial real estate is in serious trouble. Even the billionaire real estate investor Barry Sternlicht recently predicted that there will be $1 trillion in losses on U.S. office properties.
And if you weren't already convinced that our banking system is in serious trouble, consider this. Jamie Dimon, who is the president of JP Morgan Chase Bank, and a bunch of other executives within that company have recently sold almost $170 million worth of stock of their own company.
Jamie Dimon, for the first time, is selling 1 million shares of JP Morgan.
$140 million worth.
Him and his family own 8.6 million shares, so this represents about a 12% stake of his overall holdings in JP Morgan. What do you make of that?
I think it's a huge red flag. I mean, I don't know how you could take it any other way. Look, if you were very bullish on JP Morgan and the overall banking system, why would you sell those shares? Who cares if you're retiring? Wouldn't you still want the greatest return on your savings that you could possibly get? And if you felt that was the best risk reward, then why on earth would you sell?
Arguably, just to play devil's advocate, he needs the cash to buy his beautiful beachfront retirement home.
Borrow against the shares. Then you don't have to pay taxes. Well, that's what rich people do, is they borrow against their assets so they don't have to sell those assets and absorb the capital gains. If I'm just using common sense, my base case would be that he sees a massive red flag.
Yeah, there are definitely red flags all over the place, and Jamie Dimon is obviously seeing them.
So he's sitting there looking at his share price, maybe looking at retirement. I don't know. I think he's more so looking at how do I take some of my chips off the table so they're not subject to a complete crash in the overall system and the share price going down by, who knows, 70, 80%. I think that's more the incentive here. And even if that doesn't play out, he realizes that there's a very high risk of that happening. So why not be on the defensive when you're 67 years old?
There's clearly something going on with the banking system right now. And for the sake of time, I'm not even going to touch on the fact that our economy is currently in an inverted yield curve. Over the last 40 years, 6 out of 6 times that our economy has been in an inverted yield curve, this has happened right before an economic recession or market downturn. That's just the reality of the situation we find ourselves in. So, what can you do to protect yourself and your family from the volatile economic situation and the issues that we're experiencing with the banking system right now? Well, where do the banks put their safe assets? The bank's safest assets are classified as Tier 1 assets, and those include cash, gold, and cash value life insurance. Most people have no idea that over 3,000 banks across the country store a significant amount of their safe capital in cash value life insurance. As of June 2023, banks reported having over $184 billion worth of cash value life insurance on the books. But why would banks do that? Well, they understand that money in cash value life insurance is safe, secure, and grows predictably every year. Life insurance companies are legally required to keep much more cash reserves on hand than banks. I mentioned earlier that since the beginning of the United States, over 17,000 banks have failed. But in the last 150 years, only one major life insurance company has gone under. Now, I know that a lot of people think that life insurance is a scam, but I made a whole video about that recently, so make sure you check this video out before you jump to any conclusions. Insurance companies are some of the biggest and most stable financial institutions in the world. They're truly the backbone of our economy. And when you talk about reliability, participating cash value life insurance policies have paid dividends through the Great Depression, World War I, World War II, the dot-com bubble of the early 2000s, and even the economic disaster of 2008 and 2009. During that whole period of time, these companies were profitable. Banks? Not so much. So during a time when the banking system is unreliable and the bottom may fall out of the economy at any time, other than gold and silver, cash value life insurance is really the safest and most reliable place to put capital. If banks sold a product that offered the same benefits as cash value life insurance, people would be lined up around the block to buy. What other product has safe and reliable growth guaranteed every year, where you still have access to the money, and that money grows tax-free? Oh, and did I forget to mention that cash value life insurance is protected from creditors in most states? It offers living benefits if you become terminally, chronically, or critically ill, and if something happens to the policyholder, the family gets paid a death benefit tax-free. Now, not all cash value life insurance is the same, and not all permanent life insurance offers the same guaranteed benefits that whole life does. When it comes to whole life insurance, you want to make sure that the policy is properly structured so that it accumulates cash value as efficiently as possible. And this typically means that the person selling the policy will get paid significantly less, but it's usually better for the person who's buying the policy. And you also want to make sure your policy is with a participating, mutually held company. That's very important. Now, I have two predictions. The first prediction is that we are going to see some major changes in our banking system over the next couple years. And the second prediction is that people are going to be buying a lot more cash value life insurance over the next couple years as well. It just makes sense. Where else are people going to be able to put their money where it's going to be guaranteed to grow and be safe? If you know of any places that I don't know of, please leave a comment below. I'd love to hear about them. Now, if you want to be proactive, take action, and get ahead of the curve, feel free to book a call with me. There's a link in the description below where you can set up a free call and we can answer any questions that you might have about whole life insurance and how these policies can really help set you up for a successful future. Everybody's situation is going to be different, but I guarantee a properly structured whole life insurance policy with the right company can have benefits for anybody. Again, if you'd like to know more, feel free to reach out. I hope you found value in this video, and I have links to all the other videos that I referenced down below, so make sure you check them out. There's a lot of good information in them. Until next time, take care and be well.